Hey YouTube, what's up? My name's Dylan and welcome back to Investors Avenue. So in today's video, I want to talk to you guys about market capitalization or market cap. So what that refers to is the market dollar value that the stock market is assigning to a publicly traded company. So new investors will oftentimes get confused thinking that a higher stock price means a more valuable company. However, that's not necessarily true. So today I want to give you guys an understanding of how to take a stock's price along with the number of shares outstanding and how to use those two together to really get a gauge for the size of the company and how the stock market is valuing it. So we're gonna hop onto the computer and we'll take a look at a couple examples and we'll give you guys a good understanding of what market capitalization is and how you can use it to become a better investor. So now that we know what market cap is, how do we calculate it? So market cap is taking the share price, which is also known as the company's stock price, times the number of shares outstanding. So the best way to look at this is to look at an example. So we're going to look at two companies. We're going to look at AutoZone and Microsoft. So if you look down here in the lower right of each table, you can see the column for price. So the current price of AutoZone is $1,127. The current price for Microsoft is $198. So just by looking at the stock price alone, that says that AutoZone is almost 6 times more valuable than Microsoft. So we think to ourselves, is that true? Is AutoZone a more valuable company because the stock price is so much more? Well, no, that'd be silly to think that because we didn't take anything into account other than just the stock price. So we need to look at shares outstanding. So if we look at shares outstanding for AutoZone, we see that they have 23.39 million shares outstanding or in circulation, whereas Microsoft has 7.6 billion shares outstanding. So let's do the math. For AutoZone, you take the 1,127 times the 23.39 million shares outstanding, and you get a market cap of about $26 billion. For Microsoft, if you take the 198.44 share price times the number of shares outstanding, 7.6 billion, you get a market cap of $1.5 trillion. So when looking at market cap, you can see that Microsoft is actually valued at over 50 times more than AutoZone. So looking at just the stock price alone actually tells us nothing about the value of the company. So determining market cap's easy. So all we do is take the current stock price times the number of shares outstanding and we come up with a number. What that number is what the market, what the public stock market is valuing the company at based on the number of shares outstanding. Market capitalization shows what the company is worth in the public stock market based on what investors are willing to pay for the company's stock. So now that we've seen two drastically different sizes in market caps between AutoZone and Microsoft, one would naturally think, how many different market caps are there? So generally speaking, market caps are broken into 3 buckets. You have large, which are greater than 10 billion, mid, which are 2 billion to 10 billion, and small, which are less than 2 billion. So some examples of large cap stocks would be ones like Apple, Facebook, Amazon, really your big blue chip companies. A few mid cap ones to think of would be ones like Marathon Oil, American Airlines, Zanga, and some small cap ones would be ones like Bed Bath & Beyond, US Steel, and AMC, a lot smaller companies. So market caps are important for portfolio diversification. So when you're building a portfolio, you want to make sure you have asset allocation to different market caps. You don't want to put all your eggs in one basket. You don't want to invest in all small cap stocks, the same as you wouldn't want to invest in all large cap stocks. So by diversifying across different asset class sizes, you really lower your risk. Small caps are generally more risky. However, there's other factors at play like the industry in which the company operates. So the most important takeaway of market cap is it does not measure equity value. The true value of a company can only be determined through fundamental analysis. So fundamental analysis is looking at a company, really analyzing it, looking at all their financial statements, the income statement, the balance sheet, the cash flow statement, looking at the industry in which they operate, really analyzing the industry, looking at the future of the company, looking at what the consumer wants, what the consumer's doing, where the consumer's going in the future, and ultimately looking at the macroeconomic environment, taking everything into account and coming up with a true value of the company can only be done through fundamental analysis. Market cap does not equal true equity value of the firm. So a couple key takeaways. Stock price alone does not determine value. So as we saw with AutoZone, has a stock price over $1,000. Microsoft has a stock price under $200. However, Microsoft is actually valued at over 50 times more than AutoZone based on the number of shares they have outstanding. So please don't look at stock price alone to determine the value of a company. Next, we talked about market caps, 3 different sizes: large market cap, mid-sized market cap, and small market caps. They're important for good portfolio diversification, as you want to spread your portfolio and your assets that you own across different market cap sizes to reduce the amount of risk. Next, market cap is only the market dollar value that the public stock market is assigning to the company. It's not the true equity value of the company. Stocks are often overvalued or undervalued by the stock market, meaning that the market price determines only how much investors are willing to pay for the shares and not the true value of the company. And lastly, equity value can only be derived through fundamental analysis. So the only way we can come up with a true underlying value of the company is through analyzing key ratios, financial statements, looking at the industry, looking at the macroeconomic environment and the consumer, and really coming up with a gauge for where the company is and where it's going to be going in the future to come up with the true value. We cannot look at the stock price alone or the market cap alone to determine the true value of the company. Alright, so hopefully this video gave you guys a good understanding of how the stock price alone does not determine the true value of a company. So I encourage you to leave me a comment. I also encourage you to give this video a thumbs up if you liked it. And also please subscribe to my channel in order to see investment and financial education videos in the future. So in an upcoming video, we're going to dig a little deeper into the concept of price versus value in order to ensure investors simply don't look at a stock's price and assume it's a great investment because it's cheap. All too often, new investors will flock to stocks that are less than $5 thinking, this stock's really cheap, I'm going to make a lot of money when it goes to 10, I'm going to double my money. However, that's not the right way to think. So I really want to give you guys an understanding of price versus value and build a little bit on the market cap video that you guys saw today. Also, if you've not checked out the series on understanding and analyzing financial statements, I recommend checking it out as it's a great place to start building your foundation of knowledge on your investment journey. So I appreciate you watching and I will see you guys in the next video.